Hello, traders and investors. Trading and poker are often mentioned in the same sentences. Indeed, many new traders or people with no experience in trading trend to believe equate the practice to gambling. At the same time, studies have shown that some of the best players tend to do well in trading. In reality, the two industries are relatively different, but they also have their similarities. Poker ideas can provide guidelines for making risk reward decisions in the markets. Top 10 poker rules for successful trading. Rule number 1: be patient and selective. When you aren't in the blind position with forced antes, you aren't required to risk your chips and have the luxury of waiting. This is an advantage for you since you can simply wait for the best cards that have the best chances of success. Why not use this to your advantage? Sometimes, even if you have a good bet, you may give it up so you can take an even better bet with more money in another later context with a greater payoff and a small risk. This waiting for a premium hands and making only the best bets constitute your standard strategy. These starting hands are ones such as big suited pair like ace ace or king king and big connectors like ace king or ace queen. Good hands in a later round may be two pair or greater and or when there is not strength showed by the other players. Market context. Don't just invest blindly. Wait for good high probability bets and make sure you know exactly why you are betting. You want the decisions to be very easy with a great margin of safety as possible when you bet. The trick in investing is just to sit there and watch pitch after pitch and go and wait for the right one in your sweet spot. Warren Buffett. The stock market is designed to transfer money from the active to the patient. Warren Buffett again. Patient is a great key in market investing. Being selective when to invest. Waiting for the right high probability chance of investing in the market. That's why be patient and selective when trading, investing inside the stock market. Rule 2: play cheap hands with payoffs like lottery tickets. Playing too safe and waiting for only premium hands might actually too risk adverse and a form of risk itself. It is very infrequent that you start with very strong hands and they stay strong hands throughout multiple rounds of betting. Furthermore, you may actually lose money from playing too tight since others may exploit the strategy to bet you off the hand more frequently and won't call your bets when you do have a good hand. To deal with this, you may want to try to get into the pot with very weak hands that have a great future potential. An example involves small pocket pairs like 3 threes or 5 fives before the flop, where you can even call small raise relatives to effective stack sizes, and especially if there are multiple players in the pot. You are not betting on the hand as the best hand immediately, though that's remotely possible, betting that it becomes a monster hand if you hit your third card to get a very strong three of a kind set. We want to confirm that these lottery-like payoffs to those cards that have a good potential, even though in theory and random two cards can hit it big. This means to avoid hands like 7-2 offsuit to only play small pairs. You will not tend to win often, but if you do win, you'll tend to win big. Market context. If you can get cheaply into early companies through angel investing or when the company is very cheap, you don't lose much. If you lose, but you have a massive upside. The same can be said with options as well, but options themselves to be overpriced due to implied volatility premium and time value. What's important to know is simple cheapness doesn't mean a good bet. It has to be cheap with a bright future. Thus, pocket pairs when you must pay a bit more, such as a small raise, is similar to a wonderful company at a fair price, which may be 7-2 offsuit, but may be a fair or poor company at a wonderful price. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So, playing hands cheap means when a company, especially for a trader, is basing, and for the last 7, 8, 9 months has not gone everywhere, and then it gaps up. That's a great opportunity where the last 7, 8 months the company was declining to basing, and then suddenly it gaps up, or it starts moving upwards. So something very cheap can go up more. Remember also macro to micro. Pay attention to the overall market that you're playing. Rule 3. Risk is more important than reward. Even if you're playing premium hands and market great decisions, you must be careful to bet small enough so you can survive a short-term bad luck to emerge into the long term, and the long term can be pretty long term indeed, in the tens of thousands of hands representing months or years of playing. These means don't play with too much of your bankroll in one game. Market context. Controlling for downside loss may be actually more important than wins. Loss of 25% requires a 33% return to get even. Loss of 50% requires 100% return to get even. Loss of 75% requires a 300% return to get even. Rule number 1, never lose money. Rule number 2, never forget rule number 2. Rule number 4, many small signals or one big home run. Try to be mindful of whether you are playing to win involving small bets and small pots, or playing to win to big pots involving big bets. Small pots may mean that everyone is playing premium hands and more indicative of cautious, tight, passive gains. Big pots might mean that everybody's looking for a big gamble. Neither strategy is better, but just indicative of which game you're actually in. Market context. Consider whether your preferences and skills are suited better for which of the following contexts. Context 1. Smaller bets trade actively with more positions across more securities over a shorter time frame. Context 2. Larger bets long-term hold with fewer positions across fewer securities over a longer time frame. It's important that you do not make decisions in context, but at the same time tracking and judging against criteria for context 2 and vice versa. Rule number 5. Table selection. You're always trying to get a relative advantage for your poker, since an absolute advantage is irrelevant in practice, since you're only playing against up to 9 other players at a table, and the absolute advantage may be impossible or undesirable. Even if you're among the top 10 best poker players in the world, it might not be a good game for you if you're sitting in with the next 9 best world-class poker players. In a relative way, even if you are the 500,000th bet player in the world and everyone at the table is near the 5 million best, you are in very advantageous position. You want to put yourself in the most advantageous position as possible so you can best utilize your skill and your decisions are easier and matter more. Market context. Perhaps this may involve illiquid markets or markets where there's a dominant player that may have access to better information. What your own current position is only part of the puzzle, since the cost of trading in and out of the positions may be very large when there exists a much bigger player that can control the order book. Using much larger capital can be wielded to change the price or liquidity levels. In other words, know what markets you are entering before you enter them so you know the surrounding context. Rule number 6. Emotional control is more important than intellectual knowledge. Even having world-class talent and knowing the theory is irrelevant if you're emotional, out of control, and on tilt. Poker is at least 80% mental and emotional and 20% mechanical, risk-reward decision-making, and mathematical. The best analogy I can think of is from a personal experience that there's a big red button sitting in front of me that says, "Press me." If I simply do not press it, I win. But as the night goes on and on, I get hit by very annoying or stressful situations such as losing money or even playing well or playing badly, then I have increasingly stronger urge to press the big red button. The button represents an unconstrained desire to let loose and simply gamble, and refraining from pressing it represents an adhering to a disciplined process. If it turns out that you can't control yourself, usually making stupid plays and losing a lot, then it's important that you leave for the night. Market context. You may want to set a maximum loss for a day and simply go flat and take realized loss if you're actively trading, and stop looking at the markets if you're buy and hold investing and take the unrealized loss. You want to take yourself out of a position to make more bad decisions when you're in a weak state of mind, when your money is involved and you can dig yourself deeper in the ditch. Fight with a happy heart and a strong spirit. General James N. Mattis, USMC. Rule number 7. Pot odds versus implied odds. Pot odds are defined as a ratio between the size of the pot and the bet you are facing. Intuitively, if your pot is something larger, like 5,000 and you only need to call 100 to show down your cards, then these are pot odds of 5,001 to 100 or 51 to 1 pot odds. If you must call 5,000 instead for the same pot, then the pot odds are 10,000 to 5,000 or 2 to 1, which is obviously worse. Implied odds are what you stand on future betting rounds if you draw. Thus, if you have a very good chance at making your hand such on a straight or flush draw, then you can call a bet at the current betting round that you may know is most likely the weaker hand with a good chance at making a strong or unbeatable hand later. There's also an issue of reverse implied odds when you know another player may call in an attempt to catch a future card, in which case you want to bet big enough so that doesn't make it worth it for him to see the next round. Every decision is only good or bad in the context of what the reward and risk are. If you have a good pot or implied pots, then any bet is good so long as it's small enough. Market context. What is the probability of your bet succeeding now? It's not whether a company is a definite winner or loser, but you're actually paying for it now versus what you stand to make now, pot odds, or stand to make in the future in the event of favorable developments. Rule 8. Position is crucial. Poker is played in turn when those in later positions acting later may have an advantage compared to those in earlier positions acting earlier. It's initially based on your seeing how the other person acted. Market context. In the market context, you may wait until more information such as large institution has already taken a position to give more of a good indicator to take the same bet. In betting on mergers and acquisitions, you may want to wait until it has already been announced as opposed to when it's rumored or even highly likely. This gives you effective last position and later to act. Rule 9. Money weighted decisions. If we step back and forget about the cards, chips, and all the poker rules and consider everything in terms of the amount of money bet and probabilities, then we only want to bet big. If we have a good probability of winning and a small probability of losing, that's it. Thus, it's not whether you're right or wrong, but how much money is at stake when you are right or wrong. This means making smaller bets in early trading rounds or when the pot is small. When the bets come out, there's a very high probability that the opportunity may have the exact hand you fear that can crush you. Another valuable concept is the effective size of stacks at the table relative to the size of your stack. Decisions involving bets approximately the size of the effective stacks are totally different from the bets are 1/100th or 1/500th the stack sizes. Thus, the amount of money is just as important as the actual cards. Market content. Pretty similar to poker since it involves the risk and reward of how they are considered. Basically, don't take that very large from listen unless you have a great conviction. Rule number 10. Study past hands. There exist entire databases of very important hands and even videos of people playing them. This history can be used to get a large edge in making poker decisions. Back in 2009, there was a controversy where an online player named Brian Haston studied the hand histories with the help of another player, Brian Townsend, of a famous unknown player named Islar 1, who has later revealed to be Victor Bloom of Sweden. During one heads-up session of poker, Haston won $4.2 million off of Blum. This is an issue regarding studying past hand history, but it could also involve many other points such as risk table selection and money-weighted decisions too. Market context. Very important to study past investment decisions and the info available to investors, making as well as rational and surrounding market economic conditions. History doesn't repeat itself, but it often rhymes. Mark Twain. This is only the start. These ideas from the poker that can help to make risk-reward decisions in trading and investing the markets are only a start and only constitute a small fraction of poker's utility to improve thinking. The best poker players can initially known when a situation arises when they have a strong edge and are able to exploit it as frequently and efficiently as possible. For example, recognizing when you are very likely to have the best hand or when your opponent is likely to fold to a raise. The ability to know when these situations arise is vitally important in poker, and the actual cards in your hand become less important. It's more determining what your opponent has. In this case, there's a definite parallel to trading. When you have a trading edge, you should be able to recognize it and put on a larger side. There is definitely a correlation between playing poker, trading, and investing. The greatest investors and traders in the world are usually poker players. And vice versa, a lot of hedge funds and analytics find poker players to become the next traders out there. So knowing poker and knowing trading work side to side, and many of the rules from poker can be used for your trading system. Remember, we are a technical analysis, weighted evidence, investment person. So I want you to study it, analyze it, adapt it. Peace.